Hey there, welcome to saas.unbound podcast. I'm your host, Anna Dana, head of growth at SaaS Group, a serial acquirer buying wonderful SaaS businesses to take them to the next level. Here, I chat with inspiring founders and experts to get an inside scoop on how they made their business a success. And today with me here is Antti, founder of AddSearch, a lightning fast, effortless, and customizable personalized site search for any website. They joined SaaS Group family last year, and we're going to tap into the sale process and post-sale integration, as well as the story of the product and the company. Super excited to have you here.
Great to be here, Anna.
So let's get to it. You've got a fascinating story with AddSearch. It's been around for over 10 years. And before we go, into what happened last year, I want to go back into the inception of the company and a bit into your background as well.
Yeah, absolutely. So the start of the AddSearch came from my personal problem, and I think that's always the best way to start a business. Like if you have a challenge with something and you want to fix that, then there is a good starting point. So 10 years ago, in Finland, we have this thing called tax card. So when you get salary, you need to provide a tax card to your employer. So the tax percentage and some other details are visible in the card. And 10 years ago, I was in need of this tax card. So I went to the tax authority website here in Finland, the tax.fi. And I used the inside search to search for tax card, and there was no results found. So basically that was the starting point of the business. I was thinking like, it doesn't make any sense that this website has a search field if there are no results for the most requested piece of content that the website has. So what happened was that I went to Google, I Googled the same thing and went back to the tax website and found the tax card. And basically what happened 10 years ago, but it's still happening today, is that site searches are quite poor in general. And if website owners or businesses use money to get people on their website and people can find the piece of content they are looking for and they go to Google, then all the competitor ads and all the other results are on the Google result page. So the business is in risk of losing the potential customer. So basically that's what we started fixing 10 years ago. The situation on the market is much better today, but still on weekly basis or almost on daily basis when I go to a website, especially on mobile, and I try to find a piece of content from large website using the hamburger menu or the website navigation, and then using the site search, the results are still super poor. So that's how it got started, and that's what we started fixing.
Right. So you got a bit too many expectations from a government-run website, and they're no better these days, I guess. Okay, I think I know what you're talking about because I lived in Finland exactly 10, 12 years ago. So I even remember the website you're talking about. But obviously, websites already had their searches, internal searches implemented. So how did you go out there and started saying, my search is better, right? So basically, how did you get your first customer? And since then, how has your customer acquisition strategy changed?
Yeah, the evolution has been dramatic. So basically, like the history of AddSearch or like the prehistorical era was that me and my co-founder and good friend Mikko Nurminen, we were running a website builder business before AddSearch. And we were serving small and medium-sized companies and small organizations like nonprofits and sports clubs and such. And they already had the content discovery problem, that they had lots of documentation and different kind of content on the website, but the navigation hierarchy and the search in general sucked at the time. And we sold that business in 2013, just before we started AddSearch. So because of running the website builder business for quite a long time, I think part of the AddSearch DNA came from that company. And because of the history with the SMBs and small organizations, we also launched AddSearch for small companies, small organizations, and nonprofits in the beginning. So what it meant was that the product was very like self-service driven. Anyone could try out the product with their own website content. So we would crawl the website, and anyone without any technical understanding could install the search on their website as well. Now, like thinking about now, I think the initial target group wasn't optimal, as small companies are quite price sensitive, so they are not willing to pay much, and also the churn risk is a lot higher than with the bigger customers. But anyway, we went out with the SMB self-service product, and we started getting customers from the beginning with online advertisement and Google Ads. And so what we also saw was that there was clear demand from the bigger companies and more complex cases, including the Finnish tax authority that was in contact with us and wanted to fix their search. So that was clear in the beginning, but the like small resources we had for the product development postponed those bigger customers for quite a few years. So we get working with the smaller cases and less complex use cases, and kept turning down these opportunities to serve bigger customers, maybe a bit too long. But eventually we started implementing more advanced features and open APIs that could be used to implement these more complex search needs for the bigger companies. But that was an evolution from like very, very small websites to large organizations and corporations we are serving today, including some of the biggest companies in the world and biggest organizations in the world. So I think we have seen the whole spectrum of company and organization sizes.
Yeah. Okay. Fascinating. So finally, you can find the tax guard in Finland.
Yeah.
That's great. It's on you. Wonderful. All right. So since you've been moving from like self-served, I guess PLG kind of motion up market, has it changed your sales process dramatically? Like, is there a big sales team right now? And yeah, what are you doing in terms of acquiring those bigger customers?
It has changed the process somewhat. We are still, or try to be product-led driven, meaning that anyone can try out the product, anyone can implement the search by themselves. But the main difference is that with the bigger customers, there are so many more stakeholders within the organization. So even if like being PLG and giving anyone the opportunity to try out the product, what usually happens is that like a developer from the customer organization tries out the product and maybe does some kind of like a technical DD that if this fills the needs, but then the buying decision is made by some business people or product people in some other part of the organization. And to juggle with these different stakeholders and different parts of the buyer organization, we have salespeople, but I wouldn't say that it's a big sales team, but we have people helping out the customer to navigate through the purchase process. But still, anyone can sign up and buy the product by themselves as well.
Okay. Yeah, that makes sense. All right. So can you tell me what has been throughout this years the most unexpected challenge with growing AddSearch?
The most unexpected, I would say that maybe something that is like doesn't make sense unless you think it a bit more is that AddSearch works for almost anyone. So the target audience is super, super, super big. And if the market size is big, of course, that's a good thing. But that also brings lots of struggles for marketing and for website messages and basically all the operations. That if you try to sell to everybody, then it's actually not good for anyone. It's just like a average for everybody. So kind of like being forced to forget some potential target groups to aim the focus on the most potential ones. So that has been maybe a bit of an unexpected struggle. And it's a positive problem because there are so many target groups, but it's still difficult to select the correct ones.
Right. It's a champagne problem, right? It's called
Yeah.
to have too many. too many customers, so too much demand for your product. That's wonderful. So okay, so I think like our main focus for this episode is going to be still the acquisition, right? So can you walk me through a little bit, because as far as I know, you've been getting out of like the operational side of the business a little bit for a while, and there is a CEO. So, at what point did you decide that this is something that you were going to do, and at what point um, you came to a decision that okay, I'm going to start looking for acquirers, or have you been maybe building a pool of potential buyers for a long time? Because everyone says, relationships matter and you have to keep updating people who could potentially then buy your business for a while. So, what's your story?
Yeah. So it's definitely a like long process instead of like a one-time project. And with us, I think like aiming to exit was clear from the day one. So it was clear for the founders and for the investors and everybody that someday we will sell the company. So that was clear. There was no discussions about if that's the strategy or not. But of course, you can't aim to exit, or it rarely like succeeds. You should aim to successful business and growing and profitable business, and then someone will buy it definitely. And with us, I think the first step towards the exit was, like you mentioned, that I stepped down from the operational role. I'm entrepreneur by soul, so I was feeling that I rather uh, kind of like step out from the operational role before the exit. And in 2020, we promoted our COO Helena Rebane to the CEO, and I became the chairman of the board at the time. So that was kind of like the first step of the process, even though that was like 3 years before the actual exit. But at that time, we started building the organization that would stand on its own feet. So the founders wouldn't be needed; it would be easily sold, and the buyer could build on top of that and kind of like keep growing the business. At the same time, we have had all kind of inbound inquiries from potential buyers or investors or partners throughout the years, and I have had like calls with them every now and then and kept the relationships up. And I think SaaS Group was in contact for the first time in maybe 2021 or something like that. So I think it was like 2 years before the exit. So we had some kind of like a warm intro done, and both of us knew the other party. But the actual exit process started in the beginning of 2023 for real. And at the time, we have or had an VC investor on board, and their investment fund was expiring, or the lifetime was coming to the end. So it was clear that the exit should happen in the near future. And at that time, the exit market was already also better than a year before when the war started, and the interest rates started to rise. So in the beginning of 2023, we started to start the process, and we actually hired a financial advisor from Finland, where we are headquartered. So they navigated through the process, and they ran very efficient process to go through the potential parties or partners, and SaaS Group was quite clear winner in like many ways. Like the commercial terms were good, but also the culture fit and the future of the company and product and customers was excellent.
That's wonderful. Thank you. That's really good to hear. Just a couple of days ago, I had a podcast with Blake Hutchinson, who's the CEO of Flippa, right? One of the biggest marketplaces for buying and selling digital assets in the world. And what he was saying, and I found it really, really fascinating. What he said was during the buying process or selling process, yes, keeping the relationship is crucial, right? And understanding the cultural fit and the price fit and everything is crucial as well. But what buyers are also looking at is how the company sustains itself and how everyone works under the pressure of the exit, because exit is stressful, right? It's a very unusual situation. Very few founders have had experience, selling multiple businesses, and there's always the first anyway, right? So how was it for you? Like, and obviously you had some external help, the advisors, and I know that we value the time of the founder and we want to streamline the process. But how was it for you? Did it take a toll on the company that something is going on? There is due diligence. There are a lot of people involved. How did it go?
For us, it was almost as smooth as it could be. Like it was very, very streamlined. And there are multiple reasons for that. So one reason is that the exit process was mostly ran by the founders who were not in the operational role anymore. So Helena, as the CEO, could focus on the daily business. She was involved in the exit also, but still the main focus was in the operational role. And same with the CTO, Janne, who was helping with the exit, but running the CTO duties at the same time. But I was able to spend lots of energy and time for the exit process without interrupting the company operations. So that was a major help this time. But also, as I mentioned, we had the advisor that helped with lots of communication and coordinated the question inflow we got from the potential buyers. So they managed that, and like what happened was that there was so many like same or similar questions coming from different parties. So they reduced the message flow a lot to us. And then maybe the third thing is that this wasn't the first exit for us. So the first exit for me and the co-founder Mikko was in 2013, and in total this was the fifth exit where I've been involved in. So I knew how the process should go and what are the risks throughout the process and challenging parts, and navigating through them and trying not to interrupt with the business was the main thing I tried to focus, and then it went successfully to the goal.
Yeah, I think it's a very valid point to to make sure that business keeps performing even during due diligence, because it is definitely an unusual situation, but it's definitely not something that founders should be afraid of. And there's so many turbulent events, I think, on the market this days, that the resilience that founders built towards the exit is absolutely amazing. So that would definitely help in the process. All right, so let's talk maybe a little bit more about the due diligence process, right? Because again, this is a bit confusing for founders. So what were the steps? What were the initial kind of steps towards the sale, right? I know that there is an intro call where you present your intent to actually sell the company, but where did it go from there? What was the first part that was evaluated, and how long did it take for you?
Yeah, so after the intro call, we provided some financial information about the company and customer base and the growth and plans we had. And based on those informations and maybe some follow-up calls, we received the offer, and then later on a letter of intent to buy the business. So one thing that our advisor was doing extremely well was that many big risks were mitigated in the letter of intent phase. So we didn't want to postpone difficult discussions to the end of the process when we would maybe have pressure to sell because we have spent so much time on the process or something like that. So we tried to, discuss all the difficult topics early on. And when we agreed on all those topics, then we signed the letter of intent, and the actual due diligence started. And it started by receiving tons of information requests from different areas of the business, like technology, law or legal, financial, HR, product, and so on. So then for the next weeks, we collected this information that was requested, and also we received tons of questions through the DD tool about the business or about the content we provided, like what this means on this row and this cell, like why this number is showing this and that. And we needed to figure it out. Of course, we couldn't answer to everything from kind of like from our top of the head. So we needed to investigate the numbers and understand them by ourselves as well, and answer why some cohort is behaving like it is. So after delivering the material, then the buyer side was going through the material, and we had like calls with the different DD flow parties. So the buyer was also using some advisors. For example, for financials, they were using a Finnish advisor, so it was quite easy to have the discussions about the Finnish accounting system and kind of like legal things with them here in Finland. And after those calls, or a couple of calls with each DD flow leader, they did some kind of DD reports for the buyer, and then actually we received some of these DD reports that kind of like we saw how they think about our business or the area of the business they were inspecting, and then we moved forward to the actual share purchase agreement negotiations. But as I mentioned, we already had the difficult discussions in the letter of intent phase, so the share purchase agreement was very straightforward.
I think that's very smart. Like, because stalling this and like trying to keep some information out of the discussions in the first phases of the deal seems like maybe a natural thing to do. But yeah, I talked with another founder that sold to SaaS Group, and they didn't think about it at first. They didn't know really how complex the due diligence was. So at one point, he said they were always stressed about like a skeleton that they forgot about, right? So like, what could be found that we forgot, or like we didn't take into account, or we didn't talk about at the very beginning, that could stall the deal or could, make SaaS Group go away. And I mean, a lot of things are negotiable and could be worked around, but yeah, these things obviously take it all on the trust and just the whole relationships, because you're in for a long road. I think that that's a great hack to use to give all the hard stuff away at the beginning. Okay, and what was maybe again the most unexpected, the most challenging thing of the DD for you?
I don't think we had any real surprises or any real challenges. Like internal challenge was that the company was already 10 years old, so we had tons of like customer contracts on paper, for example, and different contract templates used throughout the years. So there was lots of legacy and lots of content to gather. So that required lots of work, but it wasn't surprise per se. So we knew that would happen. Maybe one thing like mentally that was challenging for us was that like a couple of years ago there was COVID, and then like a year before there was the war starting in Ukraine and the interest rates raising. So there has been these like black swan moments in the past years. So basically like when the letter of intent or the DD started, we couldn't count on that the deal would go through until the papers were actually signed. We were always like worried that something crazy would happen again in the world.
Oh yes, I think like everyone says 2023 has been difficult for the founders, but then I think, oh my god, 2021, 2022 hasn't been a lot easier, like
Yeah,
if we're looking back. So but yeah,
exactly.
yeah, you guys have the greatest resilience out there in the business world. All right, so what would be your best advice to the founders who are planning to exit? Is it taking care of the contractual work? Is it taking care of the data and the documentation being in one place? Is it presenting your skeletons, the basically the first moment that you think this is the right buyer, what would be your best one?
All of those are good advices, but still the best advice is to take care of your business. And I think the worst position you can be is that you are forced to sell. So you should always be able to go break even or go profitable and walk away from the deal. So you don't want to be in the situation where the runway is ending in a couple of months and you need to sell the company. Like you have no negotiation power at that point. So definitely keeping the business in the good phase. You can always, crunch to collect the documents and papers. That's not like a deal breaker. But if the business is in good shape, then that's not a good thing. So focusing on business, focusing on keeping the threads in your hands, so you can go break even, you can go profitable, and just like walk away from the deal.
Right, absolutely. And one other thing that also is discussed, I mean, it's a very valid point, right? And it's a very valid wish to want to sell your business for the highest valuation, highest multiple possible, right? So what was in it for you? How did you go about pricing the company? And again, for example, with Blake Hutchinson, we discussed the fact that maybe you should obviously look at the benchmarks, right? And like what other companies of similar sizes or like similar operations are being sold for. Look at the benchmarks. Um, maybe price your company at the like low point of that benchmark, but then be ready to maybe to go down. How did you go about it? How did you price the company? And I'm not asking for any numbers.
Yeah, yeah, yeah. I think like the pricing is always a bit random. Like there are some benchmarks and there are some expectations on both sides, but it's like the end result of negotiation. In our case, with AddSearch, we were in a good position that we received several offers. So we knew what the range is. There was no outliers in either end of the spectrum. So we knew quite well where we stand, and that was what we expected as well. So there was no surprises in pricing wise. Uh, in my experience, like if you aim to like very very high price, it usually comes with like quite aggressive earnouts. And in our case, as the founders were not staying in the operational role, we didn't want to give the keys to operational people and just wish that the earnout will happen or something like that. So in our case, it was better to have a deal where the purchase price is quite fixed when the deal is closed. If the founder is willing to stay and really believes in the business, then like aggressive earnout can be good as well. And if the goals are met, then the purchase price can be much higher than with the fixed price. But of course, that is a big grind to do after the acquisition.
Yeah, absolutely. So, everything is done, the deal is done. And like you said, you are not planning to stay in the operational role. I know that there is something new already for you, and I want to ask about that a little later. But post merger integration, also a very hot topic, right? And something that founders are a little bit afraid of. Maybe, after the acquisition, the words just don't really add up to what they see, to what is happening to the company, to how the strategy is carried on or not. So how did the post integration go for you? Again, were there any unexpected turns? And if you're completely honest, would you change anything?
With SaaS Group, it was smooth, as there was even like dedicated people running the post acquisition merger. So it was very professionally ran and smooth. But by smooth, I don't mean that it wouldn't have required work. So there was lots of stuff to do and systems to integrate and processes to implement and so on. So lots of work, but I think everything was well documented and we got help for everything from the SaaS Group. So it was super professional, and it was very clear that SaaS Group is like professional buyer. So we were not the first and not the last company you are buying. So it was well thought out. I've seen some other cases where the buyer hasn't bought like companies before, or maybe have bought just a couple ones, and then there hasn't been any merger processes. So it has been everything like ad hoc, like coming up with some merger ideas and trying them out. And obviously the outcome is much more random. But with SaaS Group, it has been great. Also, I think like one thing that helps is that the culture fit was so good. Like we both are fully remote, so there was no offices to shut down or something like that. Uh, Employees were or are around the world in both organizations. Communication channels were similar and all that. So there was so many things already kind of like matching that the merger was smooth.
Okay, that's great. That's just great to hear. All right, so just a couple more questions. All right, so far, looking back at AddSearch, you've been working on it for 10 years. What has been the biggest win and the biggest failure?
I think the biggest win is the persistence. So we ran it for 10 years. We we had a VC investor, but they invested like 500K when the company was founded. So we were basically bootstrapped in today's terms. And we ran it for 10 years. We went through the whole customer segment spectrum from like smallest one-man companies to largest corporations in the world. And we kept listening for the customers, like what they need and what are the requests and what's the direction for the product, and kept implementing that. And it took 10 years, but the end result is like great company with great product and customers who truly love us. So I think the persistence was the biggest win. Biggest losses, difficult to say. Maybe we got a bit bad start because of the legacy with the website builder business. So we aimed to 2 small companies in the beginning, and we kept turning down these big potential customers that kept knocking our door. So we could have aimed to bigger customers from the early on, or at least like realized and implemented the features that the bigger customers request a much faster phase.
Okay, all right, but then again, you could turn it around, right? You are now serving some of the biggest corporations in the world. So not a loss, not a failure, a challenge, but a
Yeah.
good
It was
learning.
learning.
Yes.
Yeah.
All right, great. And yeah, and obviously, uh, the very important question, over those 10 years, has there been a hack that worked for you? Or, maybe you could share a hack about the acquisition, like how to find that cultural fit, how to find a pricing fit, and just, move on very smoothly and fast.
I wish there were simple hacks, but I don't think there are any like super simple ones that help you out. So there's a couple of things that has helped us. So as I mentioned, the persistence is the first one. A big part of startup success depends on the timing. So are you on the market at the right time? And the only way to hedge the timing risk is to keep doing the thing for the long time. I think there's like a whole graveyards full of startups that were too early. The market just wasn't ready for the product. So I don't know if it's a hack, but that's something that I would advise for everybody, that if you believe in your product, keep doing it and keep pushing the market forward. The other thing that not a hack either, but helps many companies out, is that keep listening for the customers, but don't listen about the customer request or the solution that the customer is asking for, but try to figure out what the customer problem actually is. Because what happens is that I think 9 times out of 10, the customers ask for a feature, like, could we have this feature? And some companies even implement the features that customers are asking for, But what you should really do is to understand like why they need this feature, what is the problem that this feature would be solving. And in most cases, you might already have another feature that fills the need, or you can create a feature that fills the need plus 10 other problems. So never implement the features that the customers are asking, but implement solutions for their problems.
That's a great one. Okay, thank you so much, Antti. All right, and as I mentioned, there is something already new and exciting that you're looking forward to. So what is it? Where are you going, and what are you planning to build, if it's not a secret?
It's a bit of a secret still, but I'm starting a new company. So I did some self-reflection last summer after the exit, and I was thinking what to do next. I think easy but a bit lazy solution would have been to go advising other companies and maybe keep doing angel investments that I have done multiple already. But by heart, I'm a builder, so quite quickly I became to a solution that I need to build something again, and starting a new company now in video streaming industry. So it's super fast growing and super interesting for me. There's 1 billion people watching live video streams uh, frequently, and on Twitch only there are 8 million broadcasters, like active broadcasters. So the market is huge, and all the new platforms are bringing live video on board, like TikToks and Instagrams, but also LinkedIn lives and all that. So I'm doing something in the live video streaming industry, but not coming out with the product yet, and still in building proof of concept and have some pilot customers lined up to test the hypothesis in the near future. And hopefully I can reveal more during the spring.
All right. Well, sign me up. We're doing live streaming on LinkedIn, so happy to
Absolutely,
test.
yes.
Are you building it with an exit in mind already? Should we expect another
Sorry?
company? Are you building it with an exit in mind? Should we expect another
No,
company of
good
yours
question.
in our
Good
portfolio?
question. I've tried to go like product first, so I've been spending my energy on the proof of concept. And I'm like technical person, so I'm coding by myself a lot and building the product. And I haven't been thinking about the exit or the funding, so I'm not sure if this would be like VC driven case. It's definitely like the market is so big and growing, and the product uh, idea is kind of like good enough for VC fit, but of course VCs would bring some other pressure for timing and or timelines and such with them. So bootstrapping is another option. And exit or not, I don't know. Just focusing on great product and then great business, and we'll see.
That's wonderful. Okay, Auntie. Well, I can't wait to try the new thing that you're working on. And like I said, we're super happy to have you and your incredible team on board. So thank you for being with us. And yeah, let's do this again when you have your new company up and running.
That would be awesome. Thank you, Anna.
Thank you so much for being here, and take care.